Welcome to Echo 311, Study Session 5, Bank Reconciliation Statement. Introduction. Well-organized businesses usually maintain bank account, that is, current account, with banks in their regions. This will help to facilitate the business operations of the organizations. Owing to this fact, bank statements are usually received at interval by these organizations, which will be compared with the business cash book, and any discrepancies will be reconciled. Learning outcomes. At the end of this unit, you should be able to 1. Define cash book and bank statement. 2. Define bank reconciliation statement. 3. State factors that cause differences between cash book and bank statement. 4. State the reasons why bank may dishonor a check. What is cash book? Cash book is an account in a nominal ledger in which all business transactions involving cash and check receipts and payments are maintained. Cash book is said to perform dual function. It functions as a journal as well as a ledger which contain business, cash, and bank transactions. What is bank statement? It is a statement prepared and maintained by banks which shows bank transactions between customers and the bank. Bank statement will show the amount credited into the customer's account, the amount debited to the same account, and the balance thereafter. Relationship between cash book and bank statement. Any amount credited to the bank statement is expected to be debited to the cash book, and any amount debited to the bank statement is expected to be credited to the cash book. So that at the end, the cash book and the bank statement will have the same balances. What is bank statement? This is seldom in real situation because timing errors and some irregularities often occur. When the balance on the cash book and the bank statement do not agree, then bank reconciliation statement will be prepared to reconcile the disagreement. What is bank reconciliation statement? It is a statement prepared by a business or a firm to correct the discrepancies between the cash book balance and that of the bank statement. Bank reconciliation statement is prepared by an organization, while bank statement is prepared by the bank on behalf of the firm or customer. When a business receives its bank statement from the bank at a regular interval, this will be compared with the cash book and then prepared a bank reconciliation statement to correct any disagreement between the two documents. Factors that can cause discrepancies between the cash book and bank statement. 1. Unpresented check. These are checks issued and credited to the cash book but which has not been presented to the bank for payment by the payee. Therefore, the balance in the cash book will be lower than that in the bank statement. 2. Uncredited check. These are checks received by the firm and debited in the cash book, but which have not been entered in the credit column of the business bank statement by the bank. Therefore, the cash book will have a greater balance than the bank statement. 3. Bank charges. These are charges deducted directly by the bank from the customer's bank statement for services rendered to the customer. Therefore, The cash book will have a greater balance than the bank statement. Credit transfer. These are amounts paid directly into the business bank account without the business being aware. It is also known as direct credit. This will make the balance as per bank statement to be more than that of the cash book. Standing order. These are orders given to the bank by the customer requesting the bank to make certain payment at a regular interval on the behalf of the customer. This will make the balance as per cash book to be greater than that of the bank statement. Dividend. These are returns from shares held by the business in other organizations which are paid directly into the business bank account. This will make the balance as per cash book to be greater than that of the bank statement. Dishonored check. These are checks received by the firm and debited into the cash book, but which the bank rejected on presentation. The cash book balance will be greater than that of the bank statement. Bank errors. These are errors committed by banks in which certain amount is wrongly paid into or withdrawn from the customer's bank account. Cash book errors. These are errors committed in the cash book by the firm or customer in which the debit side or credit side of the cash book may be overcast or undercast. Reasons why checks may be dishonored. There are many reasons why banks may reject or refuse to pay an amount on a check. These are: 1. Insufficient fund in the bank account. 2. When a check is not signed. 3. When the signature on the check is irregular. 4. When there is no date on the check. 5. When the amount written in words is different from the amount written in figures. 6. When the check is a post-dated check or stale check. 7. When there are alterations on the check without proper endorsement. Procedures for preparing bank reconciliation statement. Number 1. Compare the credit entries in the cash book with the debit entries in the bank statement and tick out those figures that appear in both. 2. List out all figures that were not ticked in the debit side of the cash book as uncredited check. 3. List out all figures that were not ticked at the credit side of the cash book as unpresented check. 4. List out those figures that were not touched at the credit column of the bank statement as debit entries in the adjusted cash book. 5. List out those figures that were not touched at the debit column of the bank statement as credit entries in the adjusted cash book. 6. Use all items from number 1. I take that again. 6. Use all items from number 4 and 5 above to prepare the adjusted cash book as follows. On the debit side, we have balance brought forward. Also on the debit side, we have all items from number 4. On the credit side, all items from number 5. And then we have balance carried down. And then the balance brought down on the debit side. Use the balance brought down from the adjusted cash book and items from number 2 and 3 to prepare the bank reconciliation statement as follows. Balance as per adjusted cash book, we had to eat unpresented check, and we subtract from it uncredited check, that is number 2 item, and then we have balance as per bank statement. Important notice: The complete format of adjusted cash book is as follows. On the debit side, we have balance brought forward, direct credit, dividend. On the credit side, we have bank charges, dishonored check, standing order. Also on the debit side, we have debit side of cash book, that is undercast, credit side of cash book, overcast, and on the credit side, we have debit side of cash book, overcast, standing order, credit side of cash book, undercast, balance carried down, and then we have the balance brought down. Debit balance from cash book means cash at hand, while credit balance signifies bank overdraft. It is important to start your adjusted cash book with debit or credit balance. Debit balance from bank statement signifies bank overdraft, while credit balance means cash at hand. You can prepare bank reconciliation statement by starting with balance as per cash book, or adjusted cash book, or with balance as per bank statement as follows. Balance as per bank statement. Add uncredited check, less unpresented check, and then we have balance as per adjusted cash book. Example, cash book bank column. On the debit side, October 11, we have balance brought forward of 760. October 14th, cash 210. October 15th, Kuti 168. October 31st, Belo 182. Zik also on the 31st of October 175. On the credit side, we have October 14th, Indy 120. October 17th, Idia 95. October 17th, Queen 90. October 31st, New All 185. And then we have balance carried down of 1,005 naira. And the total on the credit side and the debit side, 149 naira. And on the 1st of November, we have a balance brought down of 1,005 naira on the debit side. Example of a bank statement. 10th of October, balance brought forward 760 naira. 14th of October, Indy, a debit of 120 naira, and that gives us a balance of 640 naira. October 14th, cash, which is a credit, 210 naira, and that gave us a balance of 850 naira. October 17th, Idia 95 naira debit, which gives us a balance of 755 naira. On October 17th as well, we have Belo credit of 182 naira, and that gave us a balance of 937 naira. On the 31st of October, we have dividend of 100 naira, which gives us a total of 1,037 naira. And on the 31st of October as well, we have bank charges debit of 10 naira, and then we have a total of a balance of 1,027 naira. Solution: adjusted cash book. On the credit side, we have bank charges 10 naira, and then the balance carried down of 1,095 naira. balance brought forward on the debit side 1,105 naira, and then the balance brought down is 1,095 naira. Bank reconciliation statement. Balance as per adjusted cash book 1,095 naira. Add on presented checks 275 naira, which gives us 1,370 naira, less uncredited check, which is 343 naira, and that gives us a bank balance of 1,027 naira. Summary. From this session, you have learned the principles why organizations maintain bank accounts. You have also learned the relationship between cash book and bank statement and the factor that may cause the two documents not to agree. You have also learned the procedure for preparing adjusted cash book and the bank reconciliation statement. You have learned the reasons why banks may dishonor a check. This is the end of study session 5. Thanks for listening.